You know, from $4 million US, we grew to about 17 billion US in around about 2015. Yeah.
Wow.
It was phenomenal. We were small and nimble. We were like a sports car.
Yes.
But once you get big, it's much harder to get money to work.
Correct. Hi everybody, my name is Lin Say. Welcome to another episode of Suka Biz. Today, we've got a treat for you. Let me give you a hint who we've got. He's a billionaire. He's listed on Malaysia's Forbes Top 20 Rich list with a net wealth of roughly US 1.2 billion. He made his money in high finance in Hong Kong. He was born in Penang in the 50s, in poverty of course. He started off folding newspapers in the back room of a newsroom, The Star. Subsequently, he was upgraded to become a journalist, but he resigned because his sub-editor would not give him an RM50 raise. So, with no money to his name and definitely no ability to speak Cantonese, he left for Hong Kong. What a big risk and what a big gamble. But guess what? Some 20 years after that decision, he co-founded Value Partners, which is today one of Asia's largest independent asset management firms with an AUM of around US 6 billion. It's also listed on the Hong Kong Stock Exchange. Guys, you know who I'm talking about. In the house, we've got Datuk Seri Cheah Cheng Hye. Datuk Seri, welcome to the show. Okay, so Datuk Seri, I understand that as of 2025, you've actually stepped down from your executive role. You're no longer co-chairman and co-CIO, but you're still honorary chairman, correct?
Yes.
So you're more or less in semi-retirement now?
It doesn't feel like retirement, but the facts are as follows. I founded Value Partners in February 1993, and I stepped down in January 2025 this year.
I see.
And so I've been at the position for 31 years.
Right.
And this is a transition year for me.
Okay.
Because I have relinquished all executive roles in Value Partners Group. And I now run the Cheah family office.
Yes, that's your own family office, right?
Correct.
So what is the daily routine like of Cheah Cheng Hye's life?
These days, well, I'm 71 years old. And I spend a lot of my time reading research. Monday to Friday, I get about 2,000 emails per day.
2,000?
Yeah, roughly. Sometimes more, sometimes a little bit less.
Wow.
So these are mostly research. Okay. So I continue to do what I think I do best, which is I'm a full-time professional investor.
So nothing has changed? Just that you don't go into office, is it?
Yeah, I have my own office, the Cheah family office.
Okay.
What has really changed is that instead of working for a couple of 100,000 clients, which was the case with Value Partners, it's an asset management company, I now work for myself and my family because this is a single family office. So we only have one client, Cheah family.
I see. Okay, we'll get into that a little later, but first, let's go back in time a little bit. We want to talk about Penang when you were young and you were poor and you were in the Star.
Yeah.
Okay, so tell us what happened in the Star, because it was from the Star that you decided to go to Hong Kong, correct?
Yes, so indeed.
That was a big thing, especially back in the day. So actually, what happened? What led to that decision to go to Hong Kong?
Just money, basically. Because I joined the Star in December 1931.
Okay.
I had just finished my last paper for what at that time was called the MCE, Malaysian Certificate of Education, Form 5 in other words. Yeah.
Right.
And the day after the exam, I was cycling around the Wellkey area. I saw a long queue.
Okay.
So since I had nothing better to do, I joined the queue. I felt that if there's a queue, there was something desirable, right? Going on. Turned out to be a job in the Star, but only as a newspaper folder. Because the Star had only been in existence for a few months at that time.
Okay.
I think it was founded in mid-1971.
Right.
And I joined towards the end of 1971.
Okay.
And so it turned out the job was to fold newspaper because the Star was printed on a very old German printing press called a Heidelberg press.
Okay.
It was unable to fold the paper. So they employed human beings to fold it. So I was one of the people who did that. So by the early morning, when you finish your shift, your face is all black with newspaper.
Wow.
Yeah, that was my introduction to the world of journalism.
I see.
But doesn't matter. After a couple of weeks, I was lucky enough to be interviewed by Dato K.S. Chong, the late K.S. Chong, publisher and co-owner, and he hired me on the spot as a cub reporter. So I started, like most people, with covering the courts, and then later became a crime reporter.
Wow, I see.
And I was in the Star, I'm not going to answer your question directly. Until 1974.
Okay.
By which time I had been promoted the position of, at that time, called the acting chief sub editor.
I see. Want to ask, at that time, did you write any business stories yet? Or
No, zero.
Okay.
I mostly did crime
Okay.
and various types of features.
Okay.
And I was a sub editor.
Okay.
Yeah. So I was making 300 ringgit per month in 1934.
That's okay, right, at that time?
That's okay, but
Yeah.
I felt that compared to others, I was rather underpaid. So I went to see Dato Cheong and asked for a 50 ringgit pay raise,
Okay.
which he rejected on the spot. It's very decisive.
Oh.
And I then began to realize that maybe I should find a higher paying job because
Okay.
so I actually had an offer from the New Straits Times. There's something called grade C or D, I can't remember.
Okay. Okay.
And then simultaneously, I had a job offer from Hong Kong.
How did you get the job offer from Hong Kong?
Oh, it was no big secret. Another guy, Mr. Joe Joshi, who was also with the Star, had gone to Hong Kong on his own,
Okay.
found a job there. So the editor told him to look out for more people from Malaysia. So I was recommended by Mr. Joshi.
Wow.
So I didn't really have to work very hard to get a job offer. Yeah.
I see.
So that job offer paid 2,800 Hong Kong dollars per month, which was a lot of money for people like me,
I see.
and way ahead of what NSD New Straits Times could offer.
I see.
So I jumped at it.
So it was a no-brainer. You just went to Hong Kong.
Purely the money.
I see. So you didn't care that you couldn't speak Cantonese.
No, it's an English language paper. I didn't really think I'll stay there for a very long time.
I see.
My whole ambition was that I would stay there for 3 years, make the money, come back, and that's it. You know, like many people who went to Hong Kong at that time, we never had any long-term planning. Yeah.
I see.
Yeah.
Okay, so how was it like when you first went to Hong Kong? Was it very difficult?
No, not at
Was-
all. Hong Kong was like Adventureland.
Oh,
So it's
Adventureland.
it's a bit of an adventure. Yeah, it's a small government, big place,
Okay.
lots of personal freedoms, and I was very young at the time. So for me, it's a lot of fun. Yeah.
Okay, that's good. So you started writing business and economic stories, correct?
No, that wasn't the case. I was a sub editor,
Okay.
and in fact, the thing about Hong Kong is that when I first went there, I had a minor shock because on my first payday, they said, "Can you give us your bank account number so we can pay you?" And I said, "What? I never heard of that before. I had no idea how business or bank accounts work." In the Star, they pay you in cash in a white envelope.
Oh,
Yeah,
so that's-
you go to the accountant's office and they hand you a pay in real money,
I
cash.
see.
So first time I realized I better have a bank account. Yeah.
Oh,
So I did that.
Okay.
Then second thing I did, like good Malaysian Chinese, I went to buy an insurance policy to make out to benefit my mother, you know, because I was very worried that something bad happened to me
Oh.
and my mother would be left with nothing, right?
Okay.
So this guy came in a very impressive looking suit and tie,
Right.
and it turned out he's a salesman for AIA.
Oh.
So I bought a life insurance policy. yeah.
Okay.
Anyway, be that as it may, Hong Kong was a lot of fun. We were part of what was called the expatriate community.
Yep.
There was no real need to speak Chinese. We are all English-speaking people.
Right. Right.
Some people from white people, some overseas Chinese, what have you.
Yeah.
And we have our own world. And I was very active at that time with the Malaysian Association of Hong Kong.
I
So there's a huge colony of Malaysians in Hong Kong. To some extent, it's like you never really left home. Yeah.
Oh.
Yeah.
Wow.
Yeah.
Okay, I want to know how you made the transition because subsequently you became head of research and you got into research and all that. So the transition from being a reporter to equity research, how did that happen?
Okay, there's a long version and a short version, but let's try the short version.
Right.
The short version was that sometime in the 1970s, I began to realize that I was in love with investing. I read a book called The Money Masters
Yes.
by a guy named John Train. Train as in Train, the Train.
Okay.
And each chapter is about a master investor. So you see there inside there's people like Warren Buffett,
Justin
John
Timberlake.
Templeton. Yeah, yes. These are the greats.
Yes.
But it's value investors.
Right.
And I realized that somehow I'm naturally attracted to the idea of investing money, putting money to work in good businesses at a reasonable price.
Right.
Later, we call that the 3 R's. Right business, run by the people at the right place. So I did more and more research and I tried some investing on my own. I wasn't very successful, but I learned the
You were
basics.
investing in Hong Kong at that time.
In Hong Kong, I opened an account with Charles Schwab actually.
Oh,
So
okay.
on my own, I doing
see.
this kind of investing by using a computer. Yeah.
Okay.
And increasingly it grew on me that maybe I should get really serious. And then because I'm a happy-go-lucky guy at the time, I was, probably still am. I had the good luck to land a series of jobs that took me into financial journalism without even asking for it.
Oh.
It just happened.
It just happened.
Yeah.
Okay.
So I began to get closer and closer to money,
Yes.
markets, and investing.
Right,
Yeah,
right.
You had to see that in the right context of the 1970s and 80s when places like Hong Kong were part of the economic miracle
Yes.
in Asia, right? So the economy in Hong Kong was growing 8 to 10% a year every year.
Okay.
Creates huge opportunities.
I see.
And then from 1979 roughly, China had the opening by Deng Xiaoping,
Yes.
and there's a Chinese economic miracle. I'm told that they compressed in 4 decades what the West may have taken 2 centuries
Yeah,
to
yeah,
achieve.
yeah.
So people like me are lucky. Our journey took place at exactly the time when things got really exciting.
I see. So you were already into investing. You started to like it. Is that how you got your job in Morgan Grenfell?
Yes, you can say that. Because before Morgan Grenfell, I was in the Asian Wall Street Journal.
Yes.
I was covering capital markets, stocks, banking, etc.
So it was a natural progression, actually.
Very natural. Yeah, it's not an abrupt transition. There were no sudden breaks or major switches. Yeah, it evolved very naturally.
I see. So you already knew that time your niche was small cap companies. Is it small
No,
cap stocks?
it was not. My niche is not small caps. It's actually value investing.
Okay.
Contrarian value investing based on looking at the real economy. Yeah.
I see. Okay, so that was what you like. Now, so tell me, how did this lead to you starting your own fund? Yeah.
That will be around 1993.
Yes.
And it happened that way. I was handling the house book. That means I'm the proprietary trader
Yes.
for Morgan Grenfell in Hong Kong.
Yeah.
And the boss had a deal with me where for every 1 million I make for the company, I get to keep 15%, 15%.
Oh.
But the 15% not just for me, it's for me and my team.
Right.
But my team was actually very small, so a lot of it was for me.
Okay.
So by 1993, I had made about 1 million US in the bonus from this kind of trading.
Wow.
Yeah, that was big money at the time. I was already a US dollar millionaire
Wow.
in 1993, But almost all of it was from having big money for Morgan Grenfell and earning the 15% take,
I see.
which at that time and even now is quite common in funds.
Yeah.
Yeah, it's not uncommon. Yeah,
Yeah.
it's a standard arrangement.
I see.
So with that money, I thought I could start my own. And then I met my partner, Mr. Ye,
Yes.
who is from a very rich and established Hong Kong family.
Okay.
They're construction and real estate.
Right.
And he said, that's a great idea. I think we should combine. And we started Value Partners because to start an asset management company, you must have assets to manage.
Yes.
So that's my 1 million US. I put it all in.
Oh, so your capital was US 1 million.
No, 4 million at the start, of which 1 million came from me.
Okay, I see. Wow. All right. Okay.
Value Partners started with 4 million
Okay.
in February 1993.
4 million US, is it?
4 million US, yeah.
Right. Okay.
Yeah.
Okay.
From 4 million US, we grew to about 17 billion US in around about 2015. Yeah.
Wow.
It was
Okay, so
phenomenal.
especially in the early days, how come y'all grew so fast? What was your niche back then?
Performance. Of
Performance.
course. Yeah. I mean, it's like you are a good cook. What if you come to a restaurant? There may be some other factors, but the main factor is they love your cooking.
Your good returns lah.
Good. And so we were probably making like 50 to 100% a year for our clients in
What
the
was it
early
normal at the time compared to the other asset management?
No.
Was it?
We were exceptional. Yeah.
And you were investing in Hong Kong at that time.
Hong Kong, China.
Hong Kong, China.
Yeah.
Oh, y'all were the exception. So
Of course, yeah.
Wow. Okay.
I want to put that in context that when I started Value Partners, we were investing mainly Hong Kong, China.
Okay.
The Chinese market was actually just a little baby because under the socialist system in China, they had no stock market for a very long time.
Right.
It was only in 1990 that the first companies in Shanghai got listed on the Shanghai Stock Exchange. So Shanghai Stock Exchange only opened its door in 1990, not that long ago.
I see.
Value Partners started 3 years later in 1993. So we are very much started at the ground floor. And we came like, I would say, people with nothing to unlearn. Let me explain why. Because I had never been a fund manager before I started Value Partners, except as a house account trader for Mong Fo, which was not an asset management company.
Yep.
It was actually a broking firm.
Right.
So I traded only the house account. And before that, I was just a financial journalist, right?
Yes.
So there were a lot of things I actually didn't know about professional full-time fund management.
Okay.
And I had nobody to teach me either. I just invented it. Turned out to be a blessing because I was able to ignore many of their so-called conventional wisdom about fund management and go my own way.
I see. And so I want to ask that the way you invest, was it very different from when you were investing for yourself compared to when you were investing other people's money?
Yes. Initially, no. Let me divide the answer into two parts.
Okay.
In the first roughly 8 years of Value Partners, the way I invest the money is the same as the way I invest my own money. But roughly from the year 2000, our fund passed $1 billion US under management for the very first time.
Wow.
So my closest associates, my most senior 2 or 3 staff told me, maybe we should close the fund. Because one reason we can outperform so easily is that we are small and nimble. We were like a sports car.
Yes.
But once you get big, it's much harder to get money to work.
Correct.
So their theory was that given the bonus structure, we are actually getting 15% of every dollar we make for the client. Maybe we better stop it at 1 billion and focus on excellent performance. And I said no. I wanted to become really big. I wanted to eventually become one of the biggest in the Asia Pacific. And so we did that, but we realized that the game had changed because you have to, besides, you have to find much bigger companies to buy. And you have to put a lot more money to work.
Yes.
And you are also competing with some very big people.
Correct.
I solved the problem around the year 2000 by developing an interesting concept called a cluster system. A cluster system is, the slogan at that time we had was that we are big enough to be strong, but small enough to be effective. Now, what do I mean by that? What I mean by that is that we divide the team into different clusters. Each cluster is expected to behave like a small fund. And all the teams are managing bits and pieces of money. Together, we seem very large, but internally, the money was actually split up divided into 5 or 6 different small teams, all of which are trying to behave like small people.
Right.
It was an interesting concept.
I see.
And it worked.
It worked, huh?
Yes. That's how we were able to maintain, for most of the 1990s and the 2000s, we were able to generate somehow
double-digit returns.
15% return, 15%. Return net to client compounded, 15% per annum.
Wow.
Compounded till the crisis year of 2008. The global financial crisis.
I see. So after you became big, you were still doing this kind of return?
Yes, of course. You can check the records. Yeah.
Wow, that's
We did that partly because I think we still had the DNA of a small company, and we were still practicing a very effective form of value investing where we would try to find bargains outside the index. We knew that most of our major competitors, people with brands like Fidelity, HSBC, Templeton, they were hugging the index very tight. Because it's much safer that way.
Yes.
To follow the index. So, because in case the market drops, the index drops, you can blame it on the index.
Exactly.
Not yourself.
Yes.
But we knew we are the underdog. We had to follow the non-index stocks, where either we win big or we may actually lose big. So we have to win big to survive.